Recently, Capital Power said it was shelving plans for a massive carbon capture and storage project. The $2.4 billion development wasn't financially viable. It raises new questions about the technology in Canada. It's one that many have hopes pinned on to help us meet our emissions goals. Laura Cameron is a policy advisor with the International Institute for Sustainable Development. Laura, thanks for being with us.
Thanks for having me.
So let's just start with whether carbon capture and storage is working the way we think it should. This isn't the first, maybe it won't be the last, but we have seen big projects set aside. What's going on?
Yeah, so carbon capture and storage, as you said, the industry is really putting it forward as a climate solution. But what we're seeing with projects on the ground is not really matching up to that promise. And so we've seen more than 2/3 of projects that have been proposed around the world have actually been shelved or canceled or put on hold. That's because of the challenges in the economics and the technology. It's, the carbon capture and storage, especially when applied to oil and gas industry, is expensive, and it also takes a long time to implement. And we haven't seen the cost come down as fast as experts had and industry had predicted previously. And so we're just seeing continued sort of challenges with this technology that make it less and less of a good investment and less competitive, especially as we see the costs of renewable energy dropping.
I was also surprised to see, Laura, the data might be a little bit out of date, but it was research that you did not that long ago showing that the majority of carbon capture and storage we have is actually used to make more oil. In other words, it's sort of going back into the production of oil. So it's not as though we're kind of reducing our overall footprint here.
Yeah, exactly. And that's, I think, a piece that is often overlooked, is that around 70% of the CO2 that these projects capture is actually used to enhance oil production, so to extract more oil. And so it not only enhances production, but it also prolongs our reliance and our use of these fossil fuels, because there's huge investments being put into these projects that take a long time to pay off. And so instead of, we're in a moment right now where we need to be shifting away from fossil fuels. We need to be investing our public funds into scaling up electrification and renewable energy and energy efficiency, and investing in carbon capture and storage in the oil and gas sector really is sort of, looking in the wrong direction.
In part, of course, because to your point, we are still producing oil, if not even more oil, and it's the downstream carbon from oil that's most of the problem. Producing oil does create some carbon, but it's really what we do with the oil that's the issue. Is there a bit of an element here of kind of good PR around carbon capture? It sounds like the right thing to be doing. It sounds like a good thing to be putting money into, and it gives people a bit of a pass?
Certainly. I mean, we've definitely seen industry being very vocal about their desire to, have more and more public investment. They're asking government, even on top of the federal carbon capture investment tax credit, for more subsidies for these projects. And on the flip side, we see that very little of their own investment in these projects. And so, they're spending a lot of time and resources telling a good story and trying to sell the story of carbon capture and storage, but we aren't seeing the companies put their money where their mouth is, and instead they're looking for more public funds. And this example of the project in Alberta is a perfect example. The Albertan government had already invested millions of dollars into this project, and then it was shelved. And so we're seeing that there's more and more examples of how this carbon capture and storage in the oil and gas sector is a particularly risky investment, and it's really it should not be a priority for public funds.
We've got about 10 seconds, but would it be your expectation that we have carbon and capture and storage at scale in this country sometime in the future?
I don't think it's where we should be investing now. If companies want to put their investments and put their kind of bets there, then they can do that. But we definitely should be spending our public funds in more efficient and short-term solutions.
Laura, so good to have you. Appreciate your time.
Thanks very much.
Laura Cameron is a policy advisor with the International Institute for Sustainable Development. Time for the takeaway and the triumph of the few over the many. Milk prices went up again in Canada this week as our centrally managed system of dairy production was afforded another increase. More noteworthy than that price inflation is a bill that has quietly made its way through both chambers of government that will entrench our supply managed sectors in a new and damaging way. Bill 282 makes it illegal for the government to make changes to our supply management system as part of trade deals. It was supported by all parties, including all three leaders. It may be good news for the 9,000 dairy farmers, but it's really horrifying news for the rest of their economy. The problem with taking any tweaks to this cartel off the table is that in every single trade negotiation we've had, it's one of the biggest irritants. It's a big part of the reason the UK just walked away from free trade talks with us and why France is still refusing to ratify our trade deal with the European Union. And when our most important trade deal comes up for review in just 2 years' time, you can bet this will be a red flag to a bull. The last time we sat down with the U.S., our system of subsidizing and protecting a few farmers, milk, eggs, and poultry specifically, was a major issue. By passing this law, we're starting the negotiations by poking our most important trade partner in the eye. It would be horribly cynical to say that supply management inordinately benefits powerful voices in Quebec and that Quebec holds a lot of power in determining who will govern the country. But whatever the reason, you'd be hard-pressed to find a politician outside of the grain belt of Western Canada willing to stand up to these wealthy farmers. Because make no mistake, the system everyone in Ottawa seems determined to protect comes at a real cost. Literally, to consumers, higher prices is the result. Even its staunchest supporters agree. In fact, they will argue that's the point, that these farmers need to be protected. But this kind of action comes with real consequences for other sectors too, in agriculture, but also manufacturers and services, when our trade agreements suffer as a result. My takeaway? Sometimes we may treat one group better than another, but it's a choice that should be made by everyone with full knowledge of what we are potentially giving up. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.